Hello traders, hello traders. Good morning, good afternoon, good evening, bonjour, bonsoir mes amis, guten Morgen, guten Tag, guten Abend. For those of you who are new to us, we are the TSTW 24 traders, and our website is www.stochastic-magdi.com. For all trade, we'll use the 5% money management rules and apply stop loss in all trades. The video is for educational purposes only. It's neither a solicitation or an offer to buy or sell any financial instrument. It is primarily for the TSTW24, TSTWSYS08, and the TSTWSYS008 traders. Okay, alright. Today is the 3rd of March 2012, and the title of this video is Crude Oil Indicator. Crude Oil Indicator. How can we use crude oil as a market indicator? It does not matter what you are trading, whether you are trading currencies, you are trading stocks, or any other financial instrument. You must pay attention to crude oil. Is a market indicator, like the Euro USD also is a market indicator. The dollar yen is a market indicator. Okay, gold is a market indicator. Silver is a market indicator. And today we will talk about crude oil, a market indicator. Okay. Last week we were talking about pure trading strategy, and we were talking about the water line, okay, the zero line or the equilibrium line of MACD. I hope you have enjoyed that video about pure trading strategy, okay, how you can trade the MACD zero line or the water line. Talking about water, the country where you need to go if you want to see a lot of beautiful lake, you need to head to New Zealand, okay, the land of a beautiful lake, big lakes, okay. The map is here. You can go to Google Map and zoom into New Zealand and do a bit of study about the lake and the water, okay, talking about the water line, okay. Ladies and gentlemen, okay, let's get started today. Before we started with the subject of crude oil indicator, we will quickly look at the S&P 500, okay, the Euro USD and the USD card before we start the main topic about crude oil, okay, indicator. Okay, so bear with us as we are going through this very fast. Okay, thank you. All right, now we have here, I did not remove my line on my chart, I still have them here. If you haven't watched our video before, you can go to www.youtube.com/trio and watch our previous video. The yellow line here on the S&P 500 is the trend line on the weekly chart. The green one here is the trend line on the monthly chart, and we have a resistance here in the zone of 1370. Okay, this week that has gone, we went above it, went to the zone of okay, 1376. Let's hold on a second. Okay, we went up to this zone here, 1376. Okay, so we went above the turquoise line just to come back to close below it. Okay, so the bearish, the resistance is still active in this zone. So there is not much to say. We are in a resistance zone for the S&P 500. Another thing I will say about the S&P 500, which represents the market itself, okay, talking about the trading triangle, the market first, the setup before the individual financial instrument. The market is the S&P 500. One must pay attention to the setup before trading any financial instrument. Okay, very important. Okay, so we know that the market is at a resistance zone. This is not the best time to be swing trading, as I explained to you before. If you want to swing trade, you must manage your trade carefully. In fact, I would prefer to say to traders that if your portfolio is very bullish, it's better to reduce your bullish exposure, or to manage your bullish exposure carefully, okay, because the market is at a critical zone right now. We will see what will happen. Do not assume anything, but manage your trade carefully. Okay, we see a lot of politicians talking too much, a lot of blah pushing the market up, a lot of distortion in the market. As I explained to you, the best strategy at this point in time is for day trading. Okay, using day trading strategy, swing traders need to manage their trade carefully. Those who are very bullish, okay, be very, very careful, as you have seen for the euro USD. So not much has changed here. We are still stuck below the turquoise trend line in the zone of 1370, talking about the S&P 500 that represents the market itself. Okay, as you can see here, if you break above it and retest in a turnaround, then the next resistance is the red horizontal line in the zone of 1400. As you can see, if the price approaching a very important level, okay, the price will slow down. A lot of consolidation, as you have seen recently, blah blah blah, a lot of consolidation, because the price in the resistance zone, okay, be very, very cautious. Okay, this is about the S&P 500. So my line are still here, and I will not going to change anything at all. This is what we talk about, following the price itself, the number one indicator, without guessing it, but getting it right. Okay. The next candidate is I'll bring on the Euro USD currency pair, my favorite currency pair. As I explained to you last weekend, I was telling you that though the euro was going up the previous week, the week before last week, it was very, very bullish. As I told you that the euro was going up like a mad dog or whatever, you know. It was going up because of all the blah blah blah, the politics, the talking, okay, the blah 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 in the market, okay. Now the blah 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 has stopped because all the noise regarding Greece bailout and the rest of the story, you know it, okay. So the euro was going up like a mad dog, as I explained to you the previous week. So last week, okay, the music has changed. As I warned you before, that you need to be very careful with the euro. We will prefer the euro to go down to the zone of 12000. That will be a better place for us, okay, to start afresh with this beautiful, okay, currency pair. Okay, this is what I will said. Okay, so the psychological price level did not change for the euro. As I told you before, the level that we were watching was 13200, which is the turquoise line here, the horizontal turquoise line. Okay, you see 13200. The previous week we went above it because the market was going up, and last week we come back again to close below the psychological price level. So last week I was telling you to be very, very careful, and the market sold it down back below the psychological price level. Now nothing has changed, so we will still keep our eyes on that level of 13200, which is the psychological price level for the euro USD currency pair. But I want to draw your attention to this trend line here on the weekly chart. I joined this point here and this point here. Allow me to draw my white trend line here. Look carefully, ladies and gentlemen. Watch here. There is a high chance that this currency pair may continue the movement to the downside into the zone of 13100, where I draw my white one here. So the price may try to retest this white trend line here. It may even continue even to the zone of 13000. That remains to be seen. As I explained to you before, this is not a signal to sell the euro, but a technical analysis that we will follow the price here, the number one indicator. If it's going up, we will buy it. If it's going down, we will sell it using our trading tool. The price now just below the psychological price level. We will see what will happen tomorrow, next week, because next week is the non-farm payroll, because the month of February is the shortest month, 29th day. We couldn't have the non-farm payroll last Friday, so it's postponed for next Friday. So watch it. The news, ladies and gentlemen, talking about the trading triangle, the market first, the sector, the individual financial instrument, the heart of the trading triangle, the leaders, the news, and the fundamental. Very, very important. Okay, so this is it for the euro USD critical psychological price level 13200. Watch out for this trend line on the weekly chart. This the price may try to come back down and retest this level. We will see what will happen. Okay, do not guess it. Okay, get it right. Okay, next candidate, talking about the blah 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 of the forex market. We will, ladies and gentlemen, this video is about the crude oil indicator, and we will quickly come back to that very shortly as we are looking at this currency pair. Okay, so bear with us. We will start soon the main topic about okay the crude oil indicator. Okay, now this is the USD card. Okay, the US dollar Canadian dollar currency pair. Okay, the loonie. Okay, as some traders prefer to call it. Now this is it. As I told you before, the psychological price level, we know it. Okay, 9929. Last week we see a capitulation, which means the markets break below the NAT on the weekly chart. The NAT was the psychological price level at 9929. We dip below it. Can you believe it? Alright, but I also explained to you last week that though we were above the NAT, this high and a lower high was a bit worrying, because the price is indicating to us with this a high and a lower high that there are some bear playing around here. And I was telling you that is a bit worrying. And finally, we crashed below the psychological price level of 9929. We are now below it. In my view, this currency pair, the USD CAD, is still bullish. Though we are now in the bearish zone, we must give priority to sell signal. In my view, the price will return back below the will return back above the psychological price level, meaning that we are expecting this currency pair to quickly come back above the psychological price level and to resume the movement to the upside. That remains to be seen. Looking on quickly we go to the 4-hour chart. There is a bit of information here. If you look carefully on the 4-hour chart, the price was going down. You see, bearish. Okay, before it crashed below the psychological price level. But look carefully. There was a low, a lower low. But when the price tried to display a new lower low, it fell on this 4-hour chart to display a new lower low. This is telling us that the downtrend is getting weak. It does not mean that the downtrend is kaput or broken or finished. Okay, but it is telling us that the downtrend is weakening, because at this point in time the price failed to display a new lower low. We will acknowledge it. We will not discount it. Okay, so that's why I'm saying to you that there is a high chance that this beautiful USD CAD currency pair may return back above the psychological price level of 9929. Also talking about the fundamental, the economy in Canada is contracting now at the moment. Is contracting now. Okay, very important. Why? Because when the US was in a recession, the liquidity went out of United States, out of other countries like Canada, like Australia, and the investor, now the condition is improving in the United States. The liquidity will come back to the United States, which means those countries that survived during the recession will start contracting. This is the fractal pattern of the market, whether technical or fundamental. So what we have seen in the United States, we will see a bit of a reflection in Canada, in China, in Australia. We are bearish towards the Australian dollar, bearish towards the Canadian dollar. But talking about the Canadian dollar, we are talking also about the crude oil. When crude oil is going up, Canadian dollar will strengthen, which means this currency pair will be going down, because when the Canadian dollar is strengthening, the USD CAD will be going down, because the Canadian dollar will be stronger than the US dollar. Therefore, the US dollar, Canadian dollar will be going down if the crude oil, which is the market indicator, is going up. We will see this currency pair going down. As you can see recently, though we were bullish, crude oil was going up. Therefore, this currency pair was going down, because the Canadian dollar was strengthening. Traders that understand the fundamental are selling this currency pair, though the technical are bullish. The fundamental were not aligning with the technical. All right. So psychological price level for crude oil for this Canadian dollar. For the US dollar Canadian dollar currency pair, the USD CAD 9929, we are expecting the price to return back above it. We are not assuming anything, but we are following the price using our trading tool and paying attention to the price itself, the number one indicator, the definition of the uptrend, the downtrend, and the market pattern. Okay, all right. Now let's move on to our main topic. Our main topic is about crude oil. Crude oil, a market indicator of crude oil. And we will look at crude oil and see what we can say about crude oil. Let's get started. This is the yearly chart of crude oil, ladies and gentlemen. A beautiful chart. I hope you enjoy it. Just admire this beautiful chart for a moment. Ladies, just look at it. Okay, it's gorgeous. No indicator at all. Okay, just the price itself, the number one indicator. Okay, so this is the yearly chart of crude oil. Okay, and I have here this line in the middle here, the horizontal line here. Okay, this one here. This is the smart media line. If you do not know what is the smart media line, you need to go to www.articlebase.com. Check for the article that we title, okay, Trading Critical Price Level. Trading Critical Price Level. And you understand clearly what is this, okay, smart media line. The smart media line, okay, is the most influential critical price level. Is the CPL number 6, also called the smart media line. For the crude oil, the smart media line is at 8934. This is the most important price level. If you are trading crude oil, you must know this price level, 8934. Write it on your fridge, write it on your shoes, write it on your computer, write it on your bed. Okay, very important. Why is so important this level? It's not only a normal smart media line, it's a static smart media line. What is a static smart media line? A static smart media line is a smart media line that remains in place for at least 3 years. So, in this year 2012, this is our smart media line. Last year 2011 was the same smart media line. 2010, the same smart media line. When you have a smart media line that remains intact during, okay, at least 3 years, you have a static smart media line. A static smart media line becomes so powerful. It becomes so powerful that traders cannot afford, okay, to disregard that level. 8934. That's the key level that you cannot afford if you are trading crude oil to forget. Okay, as you can see here, the price, you see the range of this candle. Just watch the green side of this candle. This is a 2011 candle. This green section here. Can you see it? Okay, this section here, you see, just pay attention to the green section. The price went up from here to this level. Just pay attention to the green. Discount to all this long one here. So if you project just this section here, from here to this level here, from here to this level here, I'm going to start drawing some line, ladies and gentlemen. I'm speaking a bit too fast. The reason why I'm doing that, because I don't want the video to be too long. So if you think that I'm going a bit too fast, okay, you can okay, replay this video, okay, and try to understand, okay, what I'm talking about here, because I need to go a bit fast. Okay, my apology for that. So if we start drawing line here with the projection, okay, my first horizontal line, so from here to this level here, this contains the range of this green section here. If you project equal size of this from here to this level here, we project it to the other side, it brings us here. This is important price level. You see, well, this year crude oil did change direction, this zone. That's why it changed direction. So if you understand the projection, and you should have known that in this zone there is a kind of resistance taking place here. Okay, very important. So the smart media line here, first projection, second projection, you see, that's where crude oil found a bit of resistance, and now it pushes it down a bit. Okay, but looking at the price chart, the number one indicator, okay, crude oil is above the smart media line, which is the bullish zone. Okay, but the best strategy, if you want to buy, you want the price to give you a pullback above the smart media line. Do not just chase it. Okay, so on the yearly chart, we must pay attention to the all the 6 critical price level, especially the smart media line. I want to draw your attention to you. I want to draw your attention to the fact that this smart media line is a static smart media line, the level of 8934. Okay, 8934. If the price coming down, the price has a high chance to retest this level of 8934. Very, very powerful level that you must. Also, when the price deviates too far away from the smart media line, the price has a high chance to return back near the smart media line. Okay, especially if it is a static smart media line, it becomes so powerful that it will attract the price like a magnet. Okay, let's go now to the monthly chart, the crude oil. Okay, ladies and gentlemen. Talking about crude oil market indicator, the crude oil indicator. If crude oil is going up, S&P 500 has a high chance also to go up. Okay, very important. If crude oil is going down, the S&P 500 has a high chance to go down. This is a crude oil as a market indicator. Okay, if crude oil is going up, the Euro USD has a high chance to go up. If crude oil is going down, the Euro USD has a high chance to go down. So if you are trading forex or any other financial instrument, you must pay attention to the market indicator, crude oil. Crude oil is an excellent market indicator. All professional traders, every day, every night, when they are trading, they are watching the movement of crude oil, because they know that if crude oil is about to go down, the market has a high chance to go down. So they will give priority to sell signal, and if they know that crude oil is about to go up, they will give priority to bullish signal. So if you want to swing trade, be bullish and swing trade to the upside, pay attention to crude oil. If crude oil gives you a bullish swing trading signal, you will be busy, okay, giving priority to bullish signal. If the crude oil it gives you also a bearish signal, you will be busy, okay, looking for financial instruments that are bearish. Okay, that's just a small precaution that you will take, okay, using crude oil as a market indicator. Very important, okay, because you have to understand that when people are paying too much money for crude oil, they do not have enough money to spend, okay, or to invest, okay. They're going to spend a lot of money. Therefore, crude oil have a negative effect on the consumer. Therefore, crude oil going down, okay. There's also the crude oil going down. You will see that the Canadian dollar will be also weakening, because their revenue depend on oil. Okay, very important. So if crude oil is going down, we want to sell the Canadian dollar. So we will be buying the USD card if we see that crude oil is about to go down. Okay, very important. And also, if crude oil is about to go down, we can perfectly look for an opportunity to sell the Euro USD. Okay, and also crude oil is about to go down. Crude oil is a market indicator, like the Euro USD, like silver, like gold. We must pay attention to this okay, market indicator. So right now, what's happening here on a monthly chart, talking about trading zones, ladies and gentlemen, we see here that the price went down very fast. We have a bearish trend line here, this point and this point allow us to draw this bearish trend line when I'm moving my cursor. Now we have another point here, and this point allow me to draw another trend line. This is a bullish trend line. We see that with the intersection point, a bullish trend line crossing above a bearish trend line is creating for us a bullish zone. The price now at the junction of these two a trend line. Okay, we are now at the junction. Can you see? Okay, at the junction of these two trend lines, just on the edge of the bullish zone. Okay, we are on the edge of the bullish zone. If you return back below, okay, the bearish trend line, we will give priority to sell signal. If it finds support on the edge where it is now and continue the movement to the upside, we will give priority to bullish signal. That's it. Can you see it now? The price now in the bullish zone, but on the edge of okay, a bullish trend line and a bearish trend line. If you return back below the bearish trend line, we will be busy looking for opportunity to sell. Alright, paying attention to the price itself, the number one indicator. But if you find a support above, okay, stay within the bullish zone, okay, we will give priority to a bullish signal. This is about a crude oil, a market indicator. Alright, now we go back quickly and look on the weekly chart, ladies and gentlemen. Okay. Now looking on the weekly chart, there's no much we can say here, but we can draw some horizontal line here. Moment please. Alright, so the price is now here. We're going to draw some line here. There is a one level here. I'm going to draw one horizontal line here. Okay, first the top one here, the resistance level here. Alright, and then there is this level here also. Alright, I draw two lines. We're going to, you see, this is the previous high. Okay, ladies and gentlemen, there was a high here, a lower high. Okay, as far as the price remain, okay, below this horizontal line is still bearish because the price, okay, couldn't display a new higher high so far. This is the previous high here. Price went down. The price still stagnant below the previous high. It's still bearish, okay? Though we are on the edge of the bullish zone, we must trade carefully, okay? If it's going up, we must trade carefully. The level I want you to remember, the first level is at, okay, this level here, at 11260. That's the first target level. If the price continue the movement to the upside, the first and nearest resistance level, ladies and gentlemen, for crude oil, okay, this level here, at 11260. That's the first target. If the price continue the movement to the upside, the first and nearest resistance level for crude oil is at 11260. If you break above that level of 11260, the next resistance level for crude oil, okay, moment please, ladies and gentlemen, will be at 11480, 11480, 11480, okay, 11480. I'm looking for it somewhere in this region here, okay, somewhere in this region here, 11480, okay. So 11260 and 11480. So if the price continue movement to the upside, because the price on the edge, okay, of the bullish zone, okay, if you continue the movement to the upside, our first target is at 11260. If you break above the 11260 and then find a support above the 1120, our next target will be 11480. That remains to be seen. If the price return back below the bearish zone, talking about trading zone, if you haven't watched the video about trading zone, the price return back below, the return within the bearish zone, which is this zone here, we will give priority to sell signal, okay? Alright, very important. And then we will pay attention to the first and nearest resistance, the first and nearest support level if we are selling, okay? Alright, it makes sense, okay? So going back again quickly to show you what's happening here on the yearly chart, we know our important price level for crude oil. The level we are talking about for crude oil is this level here, okay, ladies and gentlemen, 89, okay, 34. This is the static smart median line for crude oil. The projection allows us to determine that in fact the price went into a resistance zone. That's why it starts coming down, okay. Now we zoom into it, okay, on the monthly chart. We notice that the price, okay, is now in the bullish zone, but on the edge of the bullish zone between one bearish trend line and one bullish trend line. So this is a critical zone. It can go up, it can go down. If you return back below, that will be in the bearish zone. We will give priority to sell signal. If we are selling, we will pay attention to the first and nearest support level, taking it step by step. But if the price finds support here and continue the movement to the upside, our first target or resistance zone is at 11260. If you break above the 11260, the next target is at 11480. Okay, I hope you enjoyed this video regarding crude oil as a market indicator, and that you will put it into use, okay, in order to cream the market consistently. We are the TSTW 24 traders. Thank you for watching, and we will speak to you very soon.